Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We definitely had some crazy news movement today, especially in the pound. Right around 5, it just all of a sudden took off. 445. So we've had some major movements in the pound. I don't see anything crazy going to happen for a little while, but I've seen today even the orange folders making moves, at least in the pound. So we want to be aware of some U.S. stuff coming off at 7:30. That's an hour from now because this is showing in Central Time, which is where I'm at. Other than that, everything pretty much will be done. Our session will be done before the red folder stuff comes into play. But let's look and see what our power grid looks like. Ooh, I don't know what happened there. I probably played around with it. So right now, if we were to go into our trade, which we will, because this is a good opportunity, let me go ahead and pull this up on my side. We're looking 7 across the board. It looks like pound Kiwi is the one we want to focus in on this morning. So let me go ahead and do that. And we'll talk about the pound yen later. Let's see if I can get the pound Kiwi up here. Let's take this one off for now. That was pound Kiwi was not one that was doing much this morning, but that looks like a good opportunity, at least to look and see what we have available to us. Typical strategy, we just go through the whole set of getting on our 15-minute chart. That's where we start. Again, if it's too fast for you, go to the 30-minute. There's nothing wrong with it. My eyes are drawn to this control area right down here. Obviously, this is probably your 38 area where it bounced off of. We'll put our fib lines on to see what our playground is. We may be a little bit too high yet to take this one, to take a market order, but we can try once it fully loads up. And again, we have our standard fib plotter here. We call it the Atlas. These are standardized numbers across the board. If you see a 1.9764 on the Kiwi, a pound Kiwi, you'll see it on every pair on the 15-minute chart, except for the yens. The yens are numbered a little bit different. We grab our fib retracement tool. We pull from top to bottom, and it actually came down to the 23. And we are actually in a position where we could take the trade. I'm going to go ahead. And the reason I'm doing it is that I'm below my 76, so I'm able to do it. And we have strong momentum. So I'm going to go take a small partial order because it's still not the retracement that I'd rather have. But I like to be in the trades to manage them. So we're going to get conservative and just let's go to 8, make it easy.
Brian?
Yes?
When you're showing the next one, Muhammad's asking where can you learn the strategy. So you may have to slow down. So
okay. Okay, I'll put this market order in, then we'll talk about what we just did. Okay, so let me look over here to see what the question was, just so we make sure. Where can I learn this? Okay, so let's talk about that strategy. A strategy is basically this, and now we're sitting in a nice clean trade. I'm going to do something I normally will do, even though my stop is 15, and we'll build up on that idea of strategy. I'm going to bring this down to the pivot low. And the reason I'm doing that is I'm getting it out of the way, letting the trade breathe. So our strategy here is to get as tight of orders as we can. And in the morning sessions, we're using pure momentum. So we have a tool that we use just to describe what the tool is. This is called Hercules. And what I have here is the 1-hour chart, 30-minute, 15, and 5. So how I got the strategy, and Al does the same thing, Eva does the same thing when we're doing currencies, is we look for the spread of the strongest momentum. Right now, pound is the strongest pair. That's the given. It's at the very top of all, and then it's good. This is our pullback area, so this is going to move a lot more. But I really focus on these three. And what I like to do is pair the strongest with the weakest. I could have gone pound Aussie, I guess. Could have gone pound Swiss. So any of these three at the bottom But the Kiwi at the time was the weakest of all at the time that we entered the trade. So that's our initial part of our strategy, is to identify where the strongest pair momentum may lie. Then we go over to I like to use FXCM. It's a little easier to draw. We go to our 15-minute chart. Now on our 15-minute chart, I'm going to remove some stuff just to make it a little bit clearer for those who are new to the room. We end up now, I want you guys to try to ignore the entry that we've done. That's just our entry. But I want you to notice we have a green line here, a red line here, a blue line here, and it continues on. What we've done is we've taken price action, price points, Fibonacci numbers, and made them standard. Instead of the traditional way of going, okay, I'm going to pull a fib retracement from the previous low to the previous high and come up with a retracement, what we found is historically, if we look at the blue line, it has been a place of consolidation and movement. So when we squish this up, and squish is a nice trading term that everybody should know. Everybody should be able to squish. But if you notice, the drop came from the blue area. We had basing first, and then it dropped from that, came back up, tried to get up there, couldn't do it. It made a little bit of a lower low. So we're back in that testing area of the blue. We're trying to get up in. Notice my target is just short of the blue line. So I'm okay with that. Now we're getting into a place now, and I'm looking at it. I know that when we look at our momentum, it's strong. I'm really going to do this. I'm going to go ahead and put a entry in here a little bit lower. I'm going to put more of a larger size trade on this one. It's a little bit more conservative. Still going to do a 15 pip stop. And then my target, because it's my second entry, this is when I do. Now, if you're not scaling in, you're going to be wanting to go conservative and do a 15 and 7. But I'm scaling in, so I'm going to do a 15 and 4. And what I do is I pull my initial entry stop down to where my other stop is. And I'm not sure what this, probably should have checked the spread today on this one. Yeah, it's kind of big right now. And that's why we're having such big movements. But I've got 2 orders. Now, I'm not so sure these are going to necessarily work out, but it's fun to watch. We have the power on our side. Momentum is showing on our side. It's still showing on our side on the 1 hour. And we got a little bit of change happening here. But we're still 3. We try to make sure we have at least 3 points difference. So we got 7 and 3, which is our 4-point difference. 7 and 1 is our 6-point. 7 and 3, that's 4-point. This one's a little bit squirrely. That's 1 point, but we don't consider this a make or break. This is just to show us where our pullback's at. So when we're looking at our chart, we've now made our entry on the 15. I made it on the 15. What I like to do, though, is once we come in, the red is also, if you look historically, where price action happened. Green, same thing. So these are price points. And what I do, and Al does the same thing, a little bit different than I do. We have our playground in here. This is what we've established, the range of where we want to be within the blue and the red. That's our playground. So with that in mind, we simply draw a Fibonacci retracement to really get a dial in on where our playground is at.
Now, it doesn't matter, does it, if you draw it down like from top to bottom or bottom up?
It just flips your numbers.
So, but otherwise the results.
Otherwise, it doesn't do anything, right? I like to have my low. I like descending numbers. And so, in essence, what this is doing is giving us our even more particular look at the trading area, giving us, this is where we definitely want to be a buyer. That's our most conservative buy. And then when we come over here, do this again, we're going a little bit more detail. This would be definitely where I'd want to make sure that I'm trying to get out, especially before I hit that blue line. But if I'm a seller, you can see this would be where I would be wanting to sell out of. So really where we want to be is what we call our money zone. We want our money to be made in here. That's where our money, because we're really going for 7 pips. We're scalping and day trading at best. Day trade could be anywhere from 15 minutes to 2 hours, making sure you close all trades at the end of the day. Scalping, we're hoping to get anywhere from 5 minutes to 30 minutes and be done. So we've got points right here that we historically, if I drew these lines across the way and we squished our screen up, you would know that at 98.10, 98.11, historically, this has been a place where price would react. And you can see it did it there. As you can see, it also has been reacting at the 38. This one came down to the 23. So this is not magic. There's no secret sauce. It is all strictly price action. And it's hard to beat that. We know that price is going to react there. We don't know if it's going to hold there, bounce from there, or go against us from that point, but we do know that price is going to react at those certain points. And you can see it right here as well. It came up to the 61, couldn't come back, so it went down to the 38. It bounced back up to the 76, came back down to the 38. And our hopes is that we just continue on up and be able to take our target out. And that's, in essence, the trade. So once we get our trade, you can either place your trade on the 15, or you can drop down like most of the time. I wanted to catch a trade so we could do a lesson here and just show you how the overall move is. Normally, I'm going to react on a 5 minute. Let me go ahead, now that you understand this, get this out of the way, clean it up a little bit. But I also have a tool that we use, and these will all be available to Auvoria Prime users in the very, very near future. So what I like to do is call a supply and demand tool. For those who are familiar with Arrow, when the Arrow tool came out, Nate and I met, and I showed him what I had been doing with the tool. It looks very, very similar, but it's a little bit more tight as far as I have control over it. It gives me strong areas of support and resistance. Notice my blue line is sitting on a strong area of resistance. Notice our extension. This tool is doing, it doesn't know anything. It's just doing what I tell it to do as far as settings. It's marking that this area from the blue to our extension is the area of supply. If you're going long, you want to be out before you get to this thing. If we look on the, then again, this is a 5 minute chart. Notice our green line, that's where our demand's at. So really this thing could fall apart. I mean, because we are at the upper portion and getting closer to our supply areas or our resistance areas. Now, I do want to look at this on a 15 to see if it changes with our demands. We had such a long extension here. The demand's going to be down here. Yeah. This is all news based. So we very well could come back down in here. My most conservative entry for this particular pair, if we were going to be conservative, would be in this area right here. That would be if I wasn't already in it and I was doing maybe an intraday trade. I could wait for that to come down there. But I was really going for the strict momentum. And so what we're looking at here, let's go back to our Hercules tool. Make sure everything's still, because the picture we don't want this to change too much. Everything looks real good. So now we just sit and wait, potentially hoping for our target to be hit. Muhammad, did that kind of answer your question? Basically, we're doing, the strategy is basically momentum trading on the 15 minute, managing it on the 5 or the 1 minute. Al manages his trades on the 1 minute, but if it's too fast for you, which if you're new, probably would be, you can always drop back to the 5 and manage it from the 5. We have moving averages, not to give us necessarily a trade, but to give us the idea of where we know that algorithmic traders and other type traders would be trying to bounce in off of. Again, there's no secret sauce to this. These are all moving averages you can put on your screen. Supply and demand tool is just a great confirmation place. And when we have this type of situation, notice that this area is the same area as our 5 minute. So that tells me we want to be out before then. I would never take a long inside of here. I took it early right before, and I've got one sitting down here that did not hit, but I'm not going to chase it. If it doesn't happen to get me, that's fine. The spread was too big.
And you wouldn't take it long because it's already too high?
I'm already long. I took it long right below here. Remember, I'm not able to take it at 98.11, but I took it at 98.10, just so I could get in the trade and talk about the strategy. That's not normally the best. I would have preferred to be down at the 61,
okay,
or even the 50. because that's where you're moving average. So if you were in demo right now, you could very well take a market order at the 50 for a long. That would be I would say that would be a fair trade. And then you just manage it on your 5 minute or your 15 minute. The 15 minute seems slower. So I like to go to the 5. It doesn't really change a whole lot. My moving averages are still in order. And you may see from time to time see a cross of the green, especially on your 1 minute. And if you're really in precision trading, then that would be an issue. Now, what we also want to teach you guys in this room is other things to look for. There's not just one way to trade. That's the thing. There's no one EA that's going to solve all your problems because the market does adjust. But remember, we're trading price action and human tendencies. Most traders, or 90% of traders, are losing money. You want to be that other side of that target. If you're losing money, then somebody else is taking it from you. So there's other things that you can see within a chart that will help you and guide you to maybe a tighter stop, maybe a better entry. And this is called a wedge. So those who've been with us for a while, there was a tool called the iris, and it would alert us of wedge patterns. So wedge patterns are strictly those patterns that kind of show consolidation. And so if you were wanting, again, notice where my entry's at. This would be a good place to enter for a long because it kind of goes with the form of a 5 minute wedge that's forming. Down here, I could make my 7 pips here as well. That would give me room even here. If we break out, then we could retest and fly up. But I don't think this was going to go too far in during our session as far as because we got so much resistance up top. But as long as we're playing the momentum, the Hercules tool, it's going to be our saving grace. And right now we're sick. Yes, ma'am.
Okay. Fernando was questioning about your 6 pip spread. Like he wasn't sure if that's what it was or not. That's fair.
Let me see what that's showing right now. It wouldn't surprise me if it was. It would not surprise me if that was. There's some of these I don't trade because of the spread. And I've got to find it on here. Here it is. Yeah. 6-point spread, almost a 6-point spread. That's dangerous. Normally I wouldn't do that, but it was fun to do in demo. And to get Muhammad benefited from hearing a little bit about the strategy. That's a dangerous thing because even though my stop's right here at 97.66, it's going to stop me out here at 97.72. Same thing kind of with the target. It's going to really have to dig in. So if we get profitable, I may just close this out for a small profit. Pound Kiwi, many times you want to be watching your spread. Your demo may not always show the accurate spread number. So if I was going to be live, I wouldn't have taken this for the very reason, just to overcome the 6 pip spread, I would have to take a much larger risk, and I would also have to take a much larger target. So yes, there are things you have to consider when you actually go into live money. The process I'm doing here is just showing you how the overall system works. And we just wait at this point. And I do this on swing trading as well. I just do it from a daily standpoint. So let's just look at go over here real quick. This is my daily charts, and it's basically the same thing. I come in, my tools tell me everything. We want to keep it as mechanical and boring as possible. I mean, it's like we said yesterday, the fun part should be us communicating, us talking about our trades, looking at each other's trades. The boring part should be the sequence and how we do our trade. Let the system tell you what the market's doing. Got a nice uptrend, big movements though. Notice where it came and our zone formed at the 50. Okay. Notice where our demand zone formed right here at the red line. This was once resistance, now becomes support. Notice where our next fresh, what we call fresh, untouched supply area. It's really at the 61 all the way. And this is big. That's big. And that's because it's big because this moves 142 pips a day. This is a big one to trade. This is not one I would normally consider scalping because it moves so fast and big. But it's got a nice trend when you do catch it. Price is above the moving average, so I would assume we would make it. And then what I like to do on the swing is just drop down to the 4 hour or 6 hour just to see if there's other things that I'm not seeing. Notice how it's moving. It couldn't close past the moving average. And again, I would not trade this on swing just because of this look. We're sitting inside of supply. It's orange. It's not fresh, and it'll be gone after the end of the 6 hours. But look at the demand here, right on our red line. This is a great place to enter. Notice where our first resistance came in right at the 38. So we would know it would move up, come in, bounce back probably to around the 26 area again. If it wanted to continue, it'd go up to this zone, which is sitting at the 50, and it would probably ebb and flow. So basically what we do in our room is we're looking for the ebb and flow. So we don't panic and get out too quick. We don't take it early, too early of an entry. We know where price is going to ebb and flow, and we pick the best price points from that. It minimizes risk, and it maximizes the potential of being successful in trading. Now, my swing trading, I'm averaging about 82% wins, and that's because I let things happen. I let the price move. We're doing pretty close to the same with our scalping here too as well. It's just let the charts tell you what they're going to do. Don't get highly emotional. And if you have these price points that have been proven, we can look back and you can see that this price, all been proven. Now, the strongest ones are this one and this one and this one and this one. These are not near strong except for the 50. The 50 seems to be a key one. 61 and 38 are not always going to be as consistent. But the 50 seems to be a nice battleground across all time frames. And we just sit and wait. I think this one will, if all goes to plan and we can continue to have the kind of momentum that we're showing on our Hercules tool, we're at 5, 5, 4, and 1. This one's just a retracement one. That's by 5. I'm good to go. And again, it goes back to being patient. Any questions about that? Fernando, did I answer your question about spread? I hope so. Normally, what I like to do, in all honesty, when I'm trading live, I pick the pairs that I already know pay well. And what I mean by that is we also have this that you guys are going to be provided. We have a calculator. And what I do is we created this. And I look for the pairs that, first and foremost, that pay well. The Euro Aussie is notoriously low. It's not one I would like to waste my time on because to get a 7-pip move, I'd have to majorly position size. However, the cool part about this thing is if I take the Euro Aussie calculation, if I really want to love to trade this pair, if I really want to, and I want to risk my 30% and I do this, it tells me how to maximize that. So I can still maximize that. The Iris is no longer available from what I understand, Pia. I don't think they're making that available anymore. But you can, the cool thing about wedges, and in our room, we're going to identify them anyway. Most of the time we're identifying wedges even before the alert comes out for Iris. And so now right now we're in a nice position. I'm going to go ahead and take this one and move it up to here. A little bit more aggressive. And then I'm going to take my stop, move that up to here, kind of clean it up because it's all going to still be the same. But I'm going to take this and move it up to here. That's my target. That way, if it happens to hit, I'll get a little bit more out of it. And other than that, we just kind of watch and trail. Nothing really. We talked about this as a team yesterday. What is Hawkeye? It's no hype. It's not. We've all spent thousands of dollars on education, books, CDs, EAs, automated traders. Everything. Yeah. And some are good. I'm using Gearbox. Love Gearbox. Al uses Variable. He loves that too. I'm using Neo. So I'm all for having EAs working for you. But the market, when you're doing manual trading, it's all about understanding price action. And there's nothing, we didn't just, this is not new. I've not seen anybody do it quite the way we've done it, but price action is the foundation of all trading. And then understanding human psychology. We already know that most traders are going to, when they see an uptrend, they're going to get in down here. Or actually, they're going to try to get in right here. It's going to pull back to where we've got all the keys. They don't see this, though. They just don't want to miss out. That FOMO, fear of missing out, usually gets most traders. Now, if we can get this thing to close above this wedge, it'll be a nice thing. But notice we're coming to 76 and it's starting to hesitate. I would expect we're going to bounce around there for a little bit. We may hit our target before that. And we just kind of manage through it. And once I hit my target, then I'm going to take all entry points off. I may keep that 50. I may move it to the 61, depending on what the momentum. The Hercules is our guide. When I say Hercules, this is our guide. This is what gives us the, how long do I really want to stay into this thing? For at least for me, it tells me everything I need to know. The Atlas tool, which is our red, blue, green line, gives me my playground. It gives me my focus points. My retracement lines give me my pinpoint where I expect moves to happen. Where are my extremes? This is my extreme. I don't want to be in the trade at that point. Now, you have the ability right now, if you were in this trade, if you went with me on this trade, because we're getting closer and closer to the blue line, you could take your profits now at about 4 to 5 pips. I understand your spread's bad. And so if I get to that line and it doesn't take me out, there again, we may not close above that 76. And we've got about 3 more minutes. We'll see. There's a battle going on at the 76 again. So you could have, Al has many times when the picture changes, Al will get many times, well, he'll get close to his target and say, okay, this is not in my favor. It looks like it's kind of changing a bit. I'm going to go ahead and take what little profit I can get is better than no profit at all and holding on to a losing trade. And so you could have manually closed out that trade if you choose to do so. I usually don't, though. I usually just kind of wait it out. But this thing has such a huge spread on it. I'm sitting at 6 right now on the FXCM, and I was sitting at 4.5 on my trading view. So we just watch and see. And again, I would expect on the 1 minute Hercules tool to have seen a change. It's got a little closer. There's 3 there, and we've got a little bit here. We're still at 4. We're still at 4, and then we've got 5. So we're good to go still. We just got to be patient with it. And many times you could go off and look at another thing. Now, just as a little air of caution here, don't get caught going to pound Kiwi and then go and say, okay, Aussie's weak, go pound Aussie, and then go, oh, pound Swiss. Remember correlations. Okay, keep those in mind. Maybe you want to go U.S. Aussie, because they're pretty, or U.S. Swiss actually would be the one. So while we're doing that, we would go over here. It's not going to go anywhere. It's still going to be there. You've got all your stops in place. So we would expect that this one is moving. And you can tell I was playing with it this morning. This is the one I'm on a swing low. So I'm losing a lot on the swing. It appears, but it's just a swing. So it's not a big deal. But here's a great example. And this may help Muhammad as well. We're in extension. I'm no way getting into this. Not yet. But if we can have a close on the 15, let me go to 15. Get a better picture. If we have a close on this, my rules change. And the reason being is because here's our playground, blue and red. If we have a close here, I get to move this up here. Now, being aware of that 5 minutes supply is key. I'm not going to jump in early, but where I would be able to is I would see this wick over wick. This would be my first opportunity. And then my extreme would be this one right here. And I'd wait for them to pull back there if I have a close above the blue line. Otherwise, I'm not jumping on this. And the reason I'm not jumping is because if you look here on the 5 minute, we're sitting at an extreme area with a supply area right above our head. So I would expect it to come up here and fall back. We can move this one to right, and now with that look, we can do that right there. And I would do this right there. That's what I'd be looking for. Now it closed on the 5 minute. We need to close on the 15. And we just did. So now we can move it. And I would do this right here. I would do a set and forget type order. For me, this is the way I do it. You don't have to do it this way. You can go all in and do one trade. I like to start, just in case I'm wrong, with a smaller position shot size. And I'm not doing proper. I'm just doing something quick and easy in demo for you guys. Normally I'd use my calculator and find out what the maximum is. And I'd go like that and boom. And I'd wait for the retracement. And this is a great stop because it takes me to my extreme. And something happened. I must have hit a target, I think. I heard something click. So let's go back and see our pound kiwi and see if that was hopefully that was it. My eyeballs are not seeing. There it is. Yep, we just hit target on pound kiwi. Awesome. And that's how we do it. I mean, very, very mechanical, very, very boring. Everything's the same every morning, which is good. And the key is to be able to keep it simple, duplicate it, and then help somebody else learn the same thing. And then you have those contingency factors that you got to learn. That's why you come in the room and collaborate with other traders, is because what do you do when this doesn't quite do this? What happens when it flips? How do you get out? I mean, the ebb and flow, to me, we broke the wedge. I would like to now move. If everything stays the same, I'm coming into this area now as my entry. Still staying with the 15 and 7, but notice where my target now sits. It's right at the blue line, which is a little bit concerning because now we're having a little bit of resistance to it at all. I mean, it may not even get up there. It made a new high, but it didn't close above there yet. But we have some things in our favor here at the 61. Remember, I did say that the 61 is not as strong as the 50. So we got a wedge here. This very well could come right back down to the bottom of our wedge, do a fake out up here, and we could break down. Or we can come to the bottom of our wedge and go up. Just remember, you're not going to win every trade. There's no way to do that. You will hear. Yes.
Sorry to interrupt. But what makes the 50 stronger than the 61?
Because that number goes across multiple time frames.
Okay, so that stays static pretty much then.
Pretty much static, yeah.
Okay.
You can look at the 5, you can look at the 1, you can look at the 30, 1 hour and 4, and that 50 stays the same.
Oh, gotcha.
Yeah.
Makes sense.
Yeah. It becomes another Fibonacci thing that's a little bit different. Again, this is nothing, and you shouldn't be freaking out at this. This should be exactly what you expected. You got close to that blue line, and you got it rejected. I mean, this should not be freaking you out. Now, if you're trading wedge, this will be the opportunity to, when it touches the wedge, to go long. If you're more aggressive, but you just don't have a lot of room. I mean, I got in here, so you're right there. You'll be better than what I did. I did this very quickly, but you could do a wedge touch and go. That's what Irish would tell you to do. You identify the wedge. You have some rules in place with a wedge, and we'll do all those throughout our trading here in Hawkeye. We have a foundational system that's the same. You go to your 15-minute chart. You find your playground. You do your fib retracement, and you look in where it is in the chart, and you either take it or you don't. And then at that point, you can, with time, see other things that come into play, like this wedge. But that doesn't determine my trades. Everything is price action based. The wedge doesn't determine anything for me. It does give me an area where I can realize that algorithms come into play and human nature comes into play, because wedges are one of the most popular strategies in trading. So if that's the case, a lot of people use them. So it becomes a self-fulfilling prophecy. And so you remember, you are trading not only price action, but human psychology, and that's your own as well. FOMO is the biggest one for traders, fear of missing out, especially when you're scalping.
Yeah, I was bad at that, and I learned.
Yeah, that's the one. So notice nothing major here. Nothing. Thankfully, we did hit our target. That's very cool. But notice we didn't close above our previous close. So we're still in a somewhat of a consolidation type thing. Now, if this thing comes in and just closes right here, we're still good. But look what it's resisting. If we can have a couple of times, it's either going to do a couple things. It's either going to come up here and be rejected, and then just give up, or it's going to start digging in, and then we're going to have to change our playground. But again, this area right here is going to be a beast. Unless some sort of news items that we are not aware of, or institutions, governments, or large corporations come in here and say we want in, and they take it through there, this is going to be a grind. So you can expect it. So it gives you the ability to be patient and not get all trigger happy. And that's what happens. You guys, you're in the room. Most of you guys are wanting to learn how to trade. The key is discipline. And people hate that. It's not fast. It's work. But it's fun. If you have the right people in the community and everybody's communicating and talking and participating, then it gets to be a fun thing while you're watching it do its thing. But the fear of missing out, greed and fear are the biggest things that everybody can overcome. One of the best books that I've read on that was from Noah St. John, called "Get Rid of Your Head Trash About Money." And that was a game changer for me. And I've been doing this for years. I was a financial planner. But how you view money is key. So I am highly aggressive in getting in a trade, extremely patient in letting it work through a trade. Whereas Al, his personality is very patient getting into a trade, and he's less patient while in the trade. We're complete opposites.
The same.
And what's that?
I'm the same as Al as far as that goes. I could watch it come and fall into my trap forever. But once it's in, it better strike.
And the way that I overcome that is that small little position to start. That small little piece. My full position size in this particular demo account should be 180. I did 30. So it just gives me the feeling, okay, I'm not missing out. I overcame it by just starting with a little. Sometimes it ticks me off because the trade works out. If I'd have done full position size, I would have had. But how do you know that? You don't. There's no predictor of there's no way to predict where a trade is going to go other than the ability to look at a tool like this and say, okay, what's current momentum strength? That's it. That's all we've got. So let's take a quick look before I hand it over to Eva for some indices, because everybody needs to understand no matter what asset class you're trading, and we're going to be spreading out into stocks. We're going to be doing cryptos, indices, and that's swing trading and scalping in Hawkeye moving forward. Not anytime like today, but moving forward, we're going to have futures and all sorts of things that you're going to have access to. But the fact is, the trading's still the same. It doesn't matter what the asset class is. The playground has to still be established, and then the rules inside of that. I want to see one thing more before we head off to see where we finally came into. Okay, so I didn't quite get filled yet, and that's okay. I'm okay with leaving it alone. This is probably 1 pip off, maybe, and that happens. This is where I actually do become patient. I've already done the analysis. I know where my entry is. Historically, 91.65 is a nickel price. Remember, bankers, institutions do not go with pennies, 91.67. They don't do that. We actually dealt with mainly dimes and quarters. If you notice, my chart is set to nickels. From time to time, it will be nickels. But this is what I'm concerned about with this particular pair. And this is why I've taken this as a swing, and I'm not worried about it. This is what we call a parabolic move. When you really look at it, this is a strong parabolic move on a 5-minute chart. When you go back and you look at this, I'm going to set this back to 15. This is a little bit of extra. It's still parabolic. There's just not near as many candles in it. The reason I'm in this trade short is because of what it looks like in the big term. Okay. I've got a lot of room on this particular pair. I'm not sure what this is right here. I have to look and see what that is. That's my entry point. But I'm short. It may have kicked me out of my other positions because of FXCM, but I don't know. We'll find out. But I am short this too. And so here's what I do on that. So the nice thing about intraday is that you can trade the momentum. Understand there's a difference between momentum trading and trend trading. The momentum of today is this is going to go long. Momentum. But if you look over here, this is what we call speculative sentiment index. You'll hear me talk about SSI, speculative sentiment index. This is a huge number, 6.5. That's a huge number. What that number tells me is that majority of traders are long this pair. And because they're long, we know that 90% of traders lose money, 5% make money, and 5% break even. The question to me is, I always ask my group, why in the heck would you be long this pair when you look at this trend? Now, if you're a counter trend trader, not a problem. But if you're a long-term swing wealth bucket type trader, you would never be long. Not right now. Because you look at the weekly, you look at the monthly. I can guarantee the monthly's on a downturn too, or definitely downturn. Everything is short, but we've got traders going long, and it's getting higher. So that means the potential for it to drop like a rock. Where is it going to stop? We've already had our hesitation here, and then we're going to go down.
Brian?
Yep.
Why, if they're going long, why is it red and not blue?
That's my color code to tell me to go short, so it reminds me.
Oh, okay. So it's telling.
Yeah.
Okay. Yeah.
I go with the color.
Are shorting.
Yeah. Right. Same thing with the S&P 500 at the bottom. That's a pretty large number for the S&P 500. That means majority of people are expecting to crash, so they're going short. But you'll find if you look at the S&P, what has it been doing? It's been making new highs. Yeah. So people, and there's going to be an institution, there's going to be mutual funds and corporates are going to go, okay, here's the S&P. We've got majority of the traders where we want them. Now let's take it down. And they take your money. That's why I'm always with the speculative sentiment, because there's institutions, as patient as Al and Eva are, they're waiting for a price to get to a point, and then they're going to move it. We don't, with our money, we can't move a market, but they can. That's what happens with here. That's what this tool identifies. This is not us making this move. This is corporates and governments making these kind of moves. When it came up here, they were waiting for it. Where did it come in? Look where did it do its damage? Right at the 76. I mean, so it's, again, price point 50. Where's it been fighting? 50. Where's it fighting now? 38. Where did it come to? 23. So it's all planned out for you. And it goes, and you do this on any time frame. That's the beauty of it. Any time frame, it all works. And so we'll let that sit. Let me check one thing over here quickly. That's not the gearbox is doing really well for those. I like to check that from time to time. That's not what I intended to check. I wanted to see if we were in the trade. Okay, we're still the Aussie Swiss. That must have just entered for us. We'll see what happens. That was a set and forget type thing. I wasn't paying attention to it, but it's demo. Hey, do we have anything on the indices right now going on?
It was looking good earlier. Let me just
let's go ahead and look at it, even if it looks bad, because I know some of you guys like this stuff, and it helps me learn it as well. So it's all yours, Eva.
Okay.
Again, asset class does not really matter. The key is you have to learn the personality of the asset that you're trading, and then you have to understand your own personality and your personal rules.
Right. Okay, so what I do, guys, is I set my trades on the 5 minute. So that's why I've got all my indices set to 5 minute. I'm not necessarily waiting. Well, I'm not waiting for alerts. I like the supply and the demand zones that show up for me on this platform right now. So I just kind of go through quickly. Like Brian, I do price action, but I rely on the moving averages to show me the price action. And I trade momentum as opposed to trend. So with Brian's SSI, that wouldn't really work for me because Brian's predominantly a swing trader and intraday, which that is excellent for. However, for scalping, which is what I do, it's not it doesn't work the same way. So I can't use it for this right now. I don't know if it works on it doesn't work on different time frames, does it, Brian?
What's
The
that?
SSI.
The what now?
The SSI. It doesn't work on
No,
different time frames.
SSI, where we use Hercules for momentum,
Uh-huh.
SSI is more effective on 4 hours and higher.
Right. So for the scalping, I can't use that. So anyways, carry on. So what I look for before I even decide I'm going to look for a trade is that on the 5-minute chart, that my moving averages are in the proper sequence, say going from lowest to highest. So this is the 5, the 13, the 34, the 62, and the 200. And these are all in order. So I'm good with that. And because of the order that they're in, it's telling me that it's in a downward momentum. And you can clearly actually see that. So now what I will do is I will look at a higher time frame. Okay, so yesterday I was going up to the daily, but you don't really need to. And this is just to give me an idea. Okay, what's it doing within the hour? Because you just want to keep that in mind. So you can see that it's going up. So it's in an uptrend on the hourly, whereas on the 5-minute was in a downtrend. So once you're in it, you got to watch it because the potential is always there that it's going to carry on with the higher time frame. But anyway, it's not that important in my mind. More the 15-minute is the higher time frame that I prefer to have gauging. So what I will do is I'll look at the 15-minute. It's also showing me that it wants to come down. Now you see these are just now fixing themselves to get in order, but that's okay because the 5-minute looks good and that's what I trade on. So what I'm going to do here is I'm going to draw my Fibbo, and it's in a downtrend at this moment. So I'm going to go from the highest wick, actually, above this 34. How am I trying to word this? So this is the highest above and down to the lowest below. So anytime you guys have questions, please let me know. So once I've drawn that, I'm just going to mark off like my 61.8, my 50, which is basically what Brian and Al do. I just have a different way of doing it, but you're still marking off an area for you to reference.
And I can bet that those numbers will probably fall within 1 or 2 pips of what we're doing already.
Exactly.
It's just the way it goes.
Yeah. So, I mean, I don't care what the numbers are because I know the middle one's 50, one of them 62, and, so on. So I just need to know where that's my playing field, if you will, like a little bit above, a little bit below. But for me, this works just to keep a reference of where I'm at. So now I'm going to draw my Fibbo on the 5-minute because that's where I'm going to be trading. And again, I'm going to the left and it's the highest point above the 34, which I guess actually goes all the way up to here now, doesn't it? Because nothing is closed below there until here. So it's the highest point before it crosses.
And look at those lines.
Yeah, look at that.
That's what I'm saying. That's what I'm saying. It's within a pip or two all the time.
Yeah. So now I trade the pullbacks. So now this is wonderful. Already pulled back. What'd you say? That's horrible.
It's wonderful.
Oh, that's horrible.
How mechanically? Yeah, not horrible. We're good.
Okay, it's that Texan accent, I guess. So I trade the pullback. So this now being the lowest point has pulled back to the 38, and now it's on its way down. Now I can look at these zones underneath here. Look at that. I mean, it doesn't mean that it can't break through the zone, but don't forget when we looked on the 1 hour, it predominantly is in an upward trend. So now do I want to risk getting into this thing thinking that it may not get to where I want to go, especially because of these? But I will, for now, just sit and leave it. I'll come back and have a look. I mean, these are all coming right where I want them. So I'll come back and have a look and wait and see, because it's going to take a minute to kind of get through this. But we'll move on to the next one in the meantime and have a look at what it's doing. Okay, so This is the Dow Jones, and again, it's doing its thing. It actually just crossed over. So let's have a quick look on the hourly. It's, well, what is it? I think basically it's in an upward trend, isn't it? In a sense.
It's sideways to me.
Well, it is, but I'm looking at again, I'm an MMA girl.
Yeah.
So it had been going up, and now it's kind of, it's
Rolling
almost
over.
like it's consolidating a little bit. And with the 200 right below here, I don't like that, because the 200 ideally would have to be up here somewhere, but this is the hourly, so that's okay. So it's changing is all this is telling me on an hourly chart. So now when I go down to the 15-minute, look at that. Now the 200's above, just where I like it. So everything is in order as it should be. So I quickly draw my Fibos. This is telling me it's going down just by the price action, and the MMA is confirming that for me. And I'll just mark off my 3 lines and get rid of this Fibonacci off of it. Okay. Now let's shoot down to the 5-minute. I need to make my, I can't reach my controls up here. I need to, because the band is in the way. That's not what I wanted to do. Shoot. Okay, what I want to do is, my goodness, I can't get at my, sorry about that. Oh, here we go. Here we go. Okay, I can stretch that out of the way, and now I can actually reach the stuff I need. Okay, so let's go back to you. Wrong thing. Okay, so I want to move out a little bit and just spread this out so I can see what's what. Okay. So this is looking okay to me. And now let me just draw my Fibbo on it. I thought I did draw it already. No, that was the 15, wasn't it? Okay, so now this,
Excuse me.
if you see now, it did the pullback, the retracement, but now it's still messing around. So I'm really not sure what it's going to do. However, I still like the way things are looking here. Now the green is, I don't know if you guys can see this, but the green is trying to cross over here, cross over the yellow. And I don't want it to, but that's okay. That's okay. What I'm going to do is I'm going to set a sell stop on this, and I'm going to set it below the 0. So I just have to right click on here, my sell stop. Okay. So now I set that because if this thing turns around enough and it has enough momentum to get past where the previous low was, even if it's just the wick that goes through, then that tells me, because of my short little movements that I take, that it's going to work for me. So what I'm going to do on the US 30, I will take a $5 movement from entry. Now, what you guys need to understand is a $5 movement on an indice that is in the tens of thousands of dollars in value is really not a whole lot of anything, as you can see.
What are your RSI settings?
My RSI is 3, 89, and 11 on the 89
levels.
for the high and 11 for the low on the 3-day. So as you can see, this would be a $5 profit for me on a 0.01. Remember I was saying yesterday, I've got a little tiny balance here, so I have to make my my lot sizes as small as I can, because It just would not withstand anything higher than that at this moment, but that's okay. So I've set this. So now we're just going to let it see. With my stops, I don't physically put them on. I have an idea of where I want it to be. Now, in this case, it should actually be like 10. If I'm doing a $5 move for the take profit, it should be 10 for the stop. But I'm going to put it up here for now. I'm going to just change that red.
While she's doing that, let me explain why that's important. Sometimes, now I will place my stop on most of my scalping stuff, but I move it away. Most of the time, Al, myself, and Eva will not take the full 15 or the $10 stop. If it starts changing pictures, we manually turn it off and we take the trade off. Understand, your brokers, whether you, there's not one that's always just perfect. Number one, they know the winning percentages of traders, and they know who may not know what they're doing. So you can find from time to time, if they need to make their profit, they'll throw it up, and you'll be stopped out if your stops are too tight. And there's nothing a whole lot you can do about it. So even in my swing trading, I have my stops so far away that the only way possible is an act of God. And I call it my oh crap stop. So that's kind of what she's doing here. She's creating her oh crap stop, but she's not making it a firm place. It's in her mind. She knows where she's going to get out.
Yeah, exactly. Exactly. So once it triggers, if it triggers down here and it starts to retrace back up to this line, then I'm out. So now we just wait and see what it's going to do. So let's move on to the next guy. Okay, this one here, it's still kind of, with these zones, I don't like these zones. So we'll ignore that for now. So now the UK 100.
Did you notice how fast she was able to make a determination that was not prepared? That was not ready to go. When I do my swing, it's the same thing. In a swing session, I'll go through probably 30 pairs, and I can tell within 1 minute whether we need to be taking that trade or not. And that's what she just did. And that's what you want to do. You want to be able to quickly go through and identify that's not going to work, move on.
Okay, so now this guy here, I mean, right now it's not ready. It's looking pretty good. These two guys are a little bit close, but that's okay. Quickly on the hourly, what is it doing? Well, it's, I don't know. This one is actually quite sideways. All right, what's the 15 doing for me? Okay, the 15 is showing me downward. And again, you see how I determine that with the MMAs. They're in perfect order. I love it when they're like this. When they start looking like pretzels, I just don't even go near them. There's no point in looking at that. So again, downward. We go from our pivot high to our pivot low based on the 34 in the middle. Oops, what happened there? Oh, I put the wrong thing. I wanted to draw another symbol.
No, oops. We don't want to hear oops.
Now these lines, I'm not going to bother changing the colors. You guys, just for speed, the purposes of speed here. I think you guys know by now what they're there for. Okay, delete. Can I get rid of you? Yeah, there we go. Okay, so let's move down to the 5. What I'm waiting here now is for this to cross. I can still draw my Fibonacci on this just to know where the playing field is, basically, and where I'm waiting for, like it retraced up almost to the 38. That to me is okay. Anything 23 and higher to me is a valid retracement. Once it starts retracing past the 76, then I really got to kind of watch and see what it's going to do. It doesn't mean it won't come back down, but there's a pretty good chance that it may carry on that way. So, but for now, it retraced up past the 23, so I'm okay with that. I consider that valid. But until these cross over, I'm not particularly willing to get into anything. Now, the RSI, I do take that into consideration. My main guys are these, the MMAs. The RSI is more what I use when I actually get into something. And then I'll watch what it's doing, but I will check it out on the 1 minute, because that indicates to me that my 5 minute candle is going to go which way it's going to go depending on how the price is. So right now, this one, I don't know. I think I might even set one on here too. You know that? I might set one on here, and I'll do it down here again, below the wick of the pivot low. And because it's the UK 100, I only go for a $2 move on the UK 100. So like they're really, really small, tiny moves. Did that work for me? No, it didn't. Let's try that again. Okay. So, I mean, it's just a $2 movement. In my case, again, because my balance is so small, my lot sizes are small. But you can imagine if you've got a balance of even like $1,000 or $1,500 account, well, I could very easily make this a 0.010 or a 0.15. And instead of getting $2.77 on my 0.01, well, you figure out the math. That's what you can get on your $2 move. So I'm just going to leave it like that for now and wait.
And
By the
your
time-
on your
Sorry.
RSI, you had a question on how do you adjust that number? Is it right click on MT4?
This one?
Yeah. I couldn't remember how I couldn't.
It's objects list. You can right click on your chart anywhere and bring up your, is it objects list? Sorry, no, it's the indicators list. Hang on a minute. Indicators list. Relative strength index. Edit.
There you go.
And then you can get in there. You can change the color, the levels.
How'd you go from 14 to 3?
How
there it
did I
is.
go from
On parameters, your period.
Right there.
There's your period. Yep.
It's
Okay.
period
That should
3.
help.
Yeah.
Yep. That
And
was
then
a
I
question.
just fixed minimum. You have to click these, otherwise the 0 and the 100 don't show up. So you actually have to put it in there and fixed minimum of 0 and make sure it's checked, and fixed maximum of 100. And then it will, like the 89 and the, mind you, I guess you don't really need that in there. I could put 89 and I could put, let's do that. So if I put 11 and I put 89, and there you go. So it's just, you see how it just goes from the top to the bottom. So that's why I like to have it the other way. So it actually gives it a little bit of room so that I can see what it's doing. Because sometimes it goes, it's overbought and it goes above what you've set. So that's important to know as well. So it gives me a little bit more of an indication of what it's doing. So this one for now is going to sit there like that. It's not going to trigger if it's not going to come down. So I have absolutely no worries about anything with it. If it does come down, then I can almost guarantee you that this green has flipped over the yellow on its way down, in which case get me in and get me out. So, and now everybody's favorite, the German.
German.
The German. Okay, so let's do this quickly. See, this is predominantly in an uptrend. Okay, it's going sideways over the last couple of days, but basically it is still in an uptrend. They all seem to have been for the most part. So that's just something to keep in mind. But again, the MMAs are all in perfect order to show that it's going down to me for the purposes of scalping. So again, from the highest to the lowest, you see how it's actually kind of boring. It's just repetitive. You just do it over and over and over again, and it gets to the point you'll be able to do it in your sleep.
Yeah, that's pretty much what you want.
Yeah. Auvoria. All right, down to the 5. Okay, so now there's a zone there, which kind of bodes well for it going down. Let's put in our Fibonacci. So, okay, so here, you see, that's a candle close above the 34. So that's why I've got to take that as a high here. And what a neat little trick that I've learned for myself, because sometimes I can't tell when it's a red wick in a red zone. I just kind of overlay it like that. And there you go. See, I was off. There you go. So now that Fibo doesn't have a lot of space between, but again, these are five-digit values. I only go for $5. So wherever I get in, it just needs to move $5, which is minimal. It really is minimal. And right now, look at that. It's trying to get through this zone. So I don't know if there's any point even in me.
Don't chase.
No, I won't chase it.
Don't
I won't
chase.
because I've drawn the Fibonacci based on the fact that it's going down. That's what my MMAs were telling me. But you see, this is what Brian talks about with the picture changing. The picture is changing. So I will not touch this right now. And it's making a higher high, right, from before. So you can see it's consolidating. It's
also forming that wedge that we talked about.
Exactly. It's forming a wedge.
Flat top wedge and it's probably flat if you look at your.
Yeah, it depends on where you're drawing it from.
Yeah, where you draw it from. If you draw it from the most recent two, you've got a very, very flat top. That's why it's always a little bit weird. You could even take it back one more pivot and have that same almost flat top there, and then your bottom is a lot more angled.
Yeah, the bottom is going up. So this could very well be. I mean, you could take it from here.
Yeah, that's exactly what I saw.
And there you go. There's kind of what it's doing, but from my experience, and it doesn't always work out this way. From my experience, when it's ascending, it eventually is going to crash.
Crash down, yeah.
Yeah. So, and that's what it's doing right now. So it may still coil up a little bit, but sooner or later it's got to break from one side to the other. So, I mean, if I wanted to, I could still place my trade right under here. And you know what? It doesn't hurt anything. And that's the beauty of these sell stops and buy stops. It's not hurting anything by sitting there.
Just make sure you're monitoring them, because if you forget that you put them on there and that it's happened days and days ago, all of a sudden you're in a trade you didn't know you were in and you aren't actually managing it. I've got caught where I've had 3 or 4 of those things, just totally forgot.
And that's exactly right. I mean, these are scalping trades. It doesn't look like it because we're patiently waiting for them to do something. But once you're in it, it's fast. So you cannot leave it alone. You cannot.
Just be aware. Yeah, just be aware of those outstanding orders you have sitting.
Yeah. The only way you can actually walk away from it is if you're pretty certain it's going to do this and you have somewhere to go, put in a hard stop somewhere, wherever you decide to put it. Usually it's a $5 move, $10 stop, $2 move, $4 stop. I'm now starting to like it better if it's a 3-to-1, $5 move, $15 stop. I mean, but you have to know how much you stand to lose if it does stop you out, and that's where the PIP calculator comes in, right?
Mm-hmm. Right.
So, I mean, okay, so now the profit here is okay. Let me show you, for example. Okay, this profit is showing if it triggers and hits my profit, I get $5.91, right? So let's put in a hard stop. Let's make it 15. 625. That's 15, is it? Yeah. Okay, so let's say that's up there. So now if you kind of hover over it, I stand to lose $17.72. If I'm okay with that, then I'll leave it. If I'm not okay with that, then I can move a little bit down. And then check it again, $11.74. I mean, you can do this on the MT4. I don't think you can do this on TradingView, but TradingView has a different way of showing it to you, which, you know, you'll learn that through us as well. But so that's pretty much what I do with these guys. I mean, you know, the S&P, again, look now, it's switching. So it's crossed right over, but it had been coming down. And so right now, I mean, there's really not a whole lot to do with it because, again, it's forming that wedge.
Can you do me a favor? Do me a favor.
Sure.
Can you do me a favor? Use a different vowel this time. Could you slip over to your daily just for a real quick glance for me?
The S&P?
Yeah. Remember I told you majority of the people are short?
Yeah, look at that, eh? That's
just,
look at that.
And
it's going up for
this is confirm. That doesn't mean it won't flip and drop like a rock, but this is confirmation that 90% of the traders are wrong. So make sure you're not one of those 90%. It's okay to be one of the 5% break even. That means you're learning, but don't be one of the 90% wrong. Be on the right side of the trades when you're supposed to be on those sides of the trades. That's crazy. Okay, thank you very much.
I mean, for again, for scalping, I mean, it's different, right?
Right. It's absolutely momentum at that point. It's not trend.
Right. Look at that. That's a $218 move on the S&P. I go for a $5 move. So with the $5 move, you don't need to have the big moves. What you do need is to have the winning small moves a couple of times, 3-4 times. And it's just as much gain if they work out for you as one big move, but nowhere near the loss of one big move that goes wrong.
Right.
So, yeah.
Very
so
good.
That's right now I can't do anything with this one, Bri. So
I think it's hilarious.
Yeah, this guy, what's going on here? Nothing. Look at that. It's flipped over. The US 30, it's flipped over. So you see, because I didn't get in on a market entry, I'm laughing here. I'm not risking a thing. Now this is going way up. So you know what I'm going to do with it? I'm just going to get rid of it. Bam.
Because by the time it comes back down, the picture's changed.
Exactly. So you can't just because it looked good for me then doesn't mean it's going to stay that way. And it's obviously changing now. Look at that. It's changing.
And technical analysis is picture. That's all it is. You understand the picture of a candle structure. You understand the movement of the candle overall, you know, whether you go 30 or 50 or 100 candles back to do your analyzation. You understand, okay, there's waves and ebbs and flows. And you already know by doing it this way and the way we've shown with currencies, you already know where the price is going to either hesitate and stop and reverse or bounce from again. So you put the playground in play, you put your rules in place, and then you sit on your hands.
Exactly.
And wait.
And wait. I mean, the UK 100, I'm still going to leave it because now I see this little zone has formed here, which wasn't there before. So it's got to go through that. And isn't that funny how my my entry point is right on the bottom of that. And I put that there before the zone formed. So it's a lot of mathematics. It's pardon me, it's a lot of training your eye to see what you're looking for. Just always give it a little bit of space. And if it's going to come through, it's going to come through. And more than likely, I mean, it's not 100%, nothing ever is, but that's
what? There are no guarantees?
No guarantees, no guarantees.
Sorry, Brian, they changed that up.
It's what now?
Sorry, Brian, they changed that up, you know?
Yeah, then I'm done. I'm quitting trading altogether. If there are no guarantees, I'm out.
Yeah. Yeah. So anyways, so there you go. That's
nice.
it. Now we just kind of sit and watch it. I mean, we can have a look at the gold, see what it's doing. Do you have
gold
something?
Should be forming a wedge. It looked like a wedge earlier today. Yeah, it is.
Okay, so yeah, the gold. And that's on the 5 minute. Gold is about the only one that I will trade on the 1 minute. And I'll tell you why that is. Because look at these 1 minute candles here. One's down, one's up, one's here. It's just a little doji. One's down, one's up, one's down. That can wreak havoc on your account. If your account is not large enough to withstand these movements as far as the drawdown goes, or then you know what, you can either blow your account or you can keep getting stopped out. So that's why I look at the 1 minute and I can see minute by minute by minute what it's doing. See, look at that thing. Look how erratically this thing moves. So you really have to be careful. There, it just took out that green zone. You really got to be careful. And then look at that now. All of a sudden, the next candle opened. It wants to go up. So that you really got to keep your eyes on. I get in on the 5 minute. I'm not going to get in on this one, so there's no point in me doing anything with it right now, just because it just crossed over. I like it to have the nice, for gold in particular, it's got to look just so, because it will eat you if you're not careful. So yeah, so
it's a fast mover.
Very much a fast mover. I mean, look at that thing. Look at these 1 minute candles. I mean, they're big, like even this. And I go from wick to wick because after all, it's a whole movement. That right there is like a 17 pip movement in one candle in less than a minute, like in a minute, say. And I never go for more than 20 pips, which is a $2 move for that reason. Because you know what, it could go down. And if I'm seeing it on the 1 minute, what I would have done if I would have gotten in and then I saw it come down here, then all of a sudden this one opened and started doing what it's doing, I would have got out manually. So that's why I monitor the gold on a 1 minute. And I just watch it like a hawk. You can't leave it for a minute. But it's starting to, the indicators on the 1 minute are starting to look nice. But on the 5 minute, they're still too jumbled up for me, so I won't do it. I've lost too many times on gold trades that I'm very, very respectful of it, I have to say. So I don't know if you guys have any questions or if it's all making sense to you.
Yeah.
I guess it's all making sense to them.
Oh, yeah, well, as much as it can be for me too.
Yeah.
Well, I know we've got about 10 minutes. Let me show you the US Swiss thing again,
Okay.
just to kind of finalize what we've done with currencies. And of course, it's very similar to what Eva just showed too.
If I get in any of them, guys, I'll let you know.
Yeah, that'd be good. Definitely. Let me find out where you're at. There we go. Here we go. Okay, so we're looking at the US Swiss this morning. This is, see if it lets me do that. Let me click on this real quick. This is this morning. Everything's in a downtrend. I was looking at the momentum tool and it was telling me to be short. I took a short early on, but I want you to be aware of the playground. The playground is from this blue line to the red line. We put our Fibonacci retracement tool. We want to be short up in here when possible. We can take it in here as well. Remember, we're going to have a bounce at the 50, but we want to not be going short down here. Okay, so watch what happens. Everything goes according to plan. It broke the 76, came to the 61, came back to the 76, and it's going to move on down to the 50. Then it's going to bounce from there, go back to the 61. It may even go back up to the 76, and then it broke the 50, and it touched the 23. Okay, now that's the extreme. I got in on the 38 for another order. Watch what happened once it hit the 23. And there we are current. Oh. So when you don't think the playground makes sense, the playground makes sense. It really, really, really does. Does it always work out this way where it goes blasting past? No, normally what would happen if the trend is really down, it'll go back to the 50 and then continue past the 23. In this case, it didn't do that. It just took off and did its thing. So now let's look current and what can we expect? Again, we can't make predictions, but we can go to what we expect it to do. First and foremost, we look at our Hercules. That's part of our strategy. We have US at 6, Swiss at 2. That's 4. 6 and 1. That's 5. 7 and 1. That's 6. And 6 and 1. We're in good shape for this to continue up. So that would make sense once we just saw the picture. If you notice, always look left. If you notice this thing's been hesitating right here where this line's at, look what's left right here. These areas right here was once support. And there's a theory, it's a self-fulfilling prophecy. What was once support, once broken, becomes demand. So if this thing will close above here, I'm moving my entry to right here. And then I'll put my second entry down here. Still going to be the same area, because really that's the place I still rather be, is down here. But I'll put another entry in if this closes better right about here. If it closes right here, I'm going to go ahead and put another entry in, because our momentum is telling us to be strong. I've got a lot of room to go. So basically what I would be doing is, it's just past it now. We've got about 4 minutes. I'm going to pretend it's the 5th minute and we're closing the candle. So I would come in here again, because it's my aggressive. I'm not going to pull the full ride on this thing. I would just want to be in it just to take a little bite. A dime drop is what I call it. I'm not trying to make my daily zones today, but now I'm in the trade. I would come over here and change it. And now I'm going to add to it. I'm going to make it bigger down there, because that's my conservative one. What I would do is drop this below this zone, give it some room to move. And I would bring this stop up to here. That way they're both in the same spot, minimizing as much risk as I possibly can and letting it do its thing based on momentum. I would not do that on trend, because the trend tells me to be short. But the momentum tells me on a short time frame to be long. And then we just write it out this way. And this is how we play in the game. And now, if you are very confident in waiting, you don't need to be in a trade, then wait and do your position sizing full blown. I like to be in trades. That's somewhat true, if I understand it correctly. Al, are you still in the room? You're going to be the generalist here.
He's being a fly on the wall.
Yeah, I don't know if he has his mic or
his voyeurism coming through.
I'm not so sure if he's awake still. But he would. I think that's true. When the dollar gets strong, the indices have a tendency to drop a bit.
He's got the baby.
Yeah, that's what it is. Probably he's probably got the baby in hand. He's playing Grandfather Day. But again, correlations like that, Pia, are technically what they have a tendency to do. There's been a lot of correlation changes over the last 3 to 4 years. It just doesn't quite match up things. And most of that, it has to do with the dollar and all the stimulus. When government starts pumping money and printing money, correlations get, at many times will get, what's the word I'm looking for? Watered down.
I will say something. I was about to type my answer to her. The UK 100 is based on the British pound. Whatever the pound does, it does the opposite. And the same with the German, it's the euro. Whatever the euro does.
So if that's the case, we would assume that at this point, the pound, the German 30 is going down. And
yeah, and that's true? What I have on it as a sell.
Yeah. And you said the UK, the other one, the
UK 100 is
UK goes to pound, and the other one was which one?
The German 30, just the two. UK is pound. The rest of them are all US based.
Yeah. And right now the US dollar is strong. So I'd assume that this is going to work out and it's going to be reasonable. Yeah. Now, where do I expect it to stop? It's pretty clear where I expect it to stop. Right before my target. And I can go down to the 5 minute and see if there's any resistance there. And I can see it right there. There's one, but I don't think this one's going to hold. Let's look at the structure of it. It's never been touched before. It is a key number. That's really 91.75. It's kind of where we're at right now.
You're in your trade now.
What's that? What would you say, Christine?
He got in his trade while he was moving.
I did.
Yep.
I did a market order.
The German 30 down below the wedge.
Oh, mine.
The German 30 did it just down below the wedge.
I want to
the wedge that we drew on here.
Yes.
Yes, it's broken down.
Guys, this is a key point too for structure of candle. You've got a pivot, basing, drop, one candle base, and a blast. That means there's order still sitting here. This is where I would expect the 91.75 to 91.80 area, where the current price may have a little hard time to get through. If momentum continues, if our power momentum Hercules keeps telling us strong, it will grind through it. However, if we start seeing slippage in our momentum, this could be a key area to drop us back down to here. It's not a huge move, but you look at the previous one on that, and it took us down to the blue. So boom to blue, bounce, and we hovered around this blue until we finally broke, and then we retested on this candle, and we've been going down since. So be aware when these zones pop up for you. Now, if you notice, we have a wick in there that cleared it. So there's a good chance that this thing will clear this all out. It'll be gone after this 5 minutes. And remember, there are no zones on the 15-minute. So 5-minute zones, even though they're valid, they're not necessarily the strongest. Higher time frame you go, the stronger it is. Yeah. So are you in your trade, Eva?
Not yet. It's creeping down towards it though on both the UK 100 and the German 30. It seems to be the green is crossed over the yellow on both of them again. So they're heading down.
Well, do you think you'll get in it today? You think it'll happen today?
I think it will happen within more than likely the next 10 minutes.
I'm kind of hoping we hit target, but I don't think we will because it's still got a ways to go up here. But I'm still going to leave it alone. This to me is for me, this is still what I would consider an intraday tech trade. Now, the further we go up with my initial entry, I'm thinking it's green. I'd come down and get this particular green stop. And let me see if that was green that I dragged. I would take this green stop and start bringing it closer just because there's no reason to get crazy. But if it's an intraday trade, I'm not going to move anything now. I'm just going to let it be at this point because I think this one's going to hit the target and then it's going to pull back. And if not, we were wrong and we take our small loss. There's nothing wrong with small losses. Just don't increase your losses.
Yeah.
Yeah. And those happen. You think you can't be wrong and you start chasing. It's all good. All right, guys. We're pretty. What's that again?
I said we're always going to have losses here and there. I mean, we can't.
It's just like I said yesterday. We had. I know people who are 90% correct and losing money because they have poor management skills, and then I know people who are 30 to 35% win percentages that are killing it. So it's not necessarily win percentage. You have to know position sizing and profit. Al's great at that. Al will take a small 7-pip move. And if he's right 1 out of 2 times, he'll be very, very profitable. It's really more about your position sizing than it is anything else. Risk management. All right, guys. Well, go ahead.
I was just going to say, before we take off, can I just show them my screen?
Sure. And while she's sharing her screen, if you've taken a trade today, enter it into the chat box because I'm going to go back and look and see where put your time that you entered it, your entry point, stop loss, and target. I want to go and see those things.
So here's the German 30. It just broke. It's been playing around where I put my hard stop loss. Isn't that funny? So now it just broke down through it. And remember the wedge that we drew on here, guys? And I was expecting it to come down, and it did. It won't always, because the market always loves to surprise, but here it goes. So see, now it's going back. It does that. And this is where I will look at the 1 minute just to see. So,
And I would say that right now, overall, your pound is strong, except on your 5-minute chart where it's got weak. So I'm expecting a bounce.
the pound, okay, but this is the
Mhm.
German that we're looking at.
Oh,
right?
so and the German would be against tied to what? Anything?
It's tied to the euro.
Euro is a 4, 4, 4, and 5. So you're kind of
So it's gonna make a big-
midstream.
Yeah.
So it's going to be pretty much algorithmic trading at this point, where people are using their moving averages and just normal trends, wave patterns. You're seeing a wave pattern being formed right now. Still
Yeah.
a flat top.
But the beauty part is here that I'm still not in the trade. It's doing all this messing around without me getting all full of angst by watching it do the messing around where my money's tied up in it. So once it finishes doing all this weirdness, if it goes up, then you know what? I haven't lost a thing. If it comes down, then it'll likely trigger, and more than likely it'll be strong enough to take me down the $5 movement. So I just wanted to show you guys that one. And the UK 100 is still doing its thing. Again, I'm not in it. And that's why these buy stops and these sell stops, to me, they're so important, you know, because I can sit here calmly and just
Without
watch
losing
what
money.
it's gonna do. So
All right. Well, we are at the top of the hour, so we're going to let you guys go. Thank you guys for coming out again this morning. Al will be back tomorrow morning along with Eva, Christine, and myself for another day of fun. Thank you for flying Hawkeye Airlines. You guys have a great day, and we will see you guys tomorrow.